Good evening, everybody. Hope everybody's having a nice summer evening. All right, tonight we've got a guest speaker that has a very successful and unique method for stock picking. And with that, in conjunction, he uses candlesticks to help verify some of his trades. So we have Bennett McDowell with us tonight, and so we want to take a look at his techniques because it's worked successfully, and we're anxious to hear what his technique is. So, Bennett, welcome to the Candlestick Forum. We're anxious to hear what you got.
Thank you, Stephen. It's great to be here, and thank you, everybody here at Candlestick Forum. You got a great group here. Steve spoke to our group yesterday, and just great material all the way around. Tonight, I'm going to talk about top secrets for picking effective trades. And we're going to cover a lot of the different methods that we use in our stock picking service. And actually, the picking service is not just for stocks. We deal with futures and forex markets too. So this is a service that is really available for a variety of folks on different levels. Most of the trades that we do are position trades, and we'll cover that throughout the presentation. Again, Steve already introduced me. My name is Bennett McDowell. I'm President and CEO of TradersCoach.com. I've written 3 books, Traders Money Management System on Risk Control. These are all available. Probably best places through Amazon, and where you can read all the reviews and so forth. But the book on the left is really all about money management. And we all know as traders, no matter what kind of method you use, money management is really, really important, and really, I think, the key to doing great in trading. Because if you can keep the losing trades small through effective risk control, then, of course, you can let your winners run as well. The Arts of Trading is a book that stands for Applied Reality Trading. And this is an approach that we use for entries and exits. And we have a lot of folks using the ART system that are also avid candlestick users too. In fact, Stephen, they're using your system along with ART, and the results have been tremendous with that. My book on the right, called A Survival Guide for Traders. Now, this book really takes you out of the bounds of the science of trading and puts you into how to run your trading as a hedge fund. So it really is geared more on the business side of trading, and we give you a business plan that I've customized for traders, and it's been real popular, and I'm glad to say, and again, you can get the business plan when you buy the book, and we also have a downloadable PDF file for that. I've got a brand new book, not yet released, coming out this fall or winter, and it is from McGraw-Hill. It's going to be published from McGraw-Hill, and it's on the Elliott Wave. Elliott Wave is something I'm going to talk a little bit about tonight, and it's one of the tools of technical analysis that I use in order to find our best picks when we initiate momentum trades. We always like to go in the direction of the impulsive Elliott Wave, so we're going to talk about that.
Bennett,
so the other thing,
Bennett,
yes, sir.
Bennett, let me interrupt you.
Oh boy, that's a problem.
Trades.
Let's do something. I'm glad you mentioned that. I didn't realize that. Let's try a different situation. Let's try this. Give this a second. I'll reload it, Steve.
All right. Okay, see the presentation disclaimer now.
Let's move it here. Let's just see what... It seems slow, doesn't it? Okay, now
It does seem slow.
All right, I'm going to start back on the books here and then move forward. All right, it's all that California living. All right, how's that? Can you see the books? Can you see the books?
Yes, I see the books now. Looks like everybody else can too.
Okay, all right. Yeah, okay, good. All right, I'm going to start talking about, and I'm going to to go to the next screen, which is the latest book coming out this fall called Elliott Wave Techniques Simplified. And this book will be published by McGraw-Hill, and this is on the Elliott Wave, and it's a tool that I use when I actually look for momentum in the markets, because I always like to trade in the direction of the Elliott Wave. So that's where you can learn more about it. And also, too, before I get going, we have to, of course, present the formal disclaimer that there is risk in trading. But, I always say, without that risk, there's no opportunity. So the two really go hand in hand. All right, so another thing I wanted to do for everybody here is I wanted to give them something free, a free report. So I'm going to put a link up in the text chat area, and hopefully that made it up there. And in this link here is a free report. It will take you to a form. You can have access to the download for this report that's in a PDF file format. And this I just updated this afternoon, so it's got the latest market information. All right, so it's available for you for free, and the link is in the text chat area. Okay, so let's move along here. All right, on our performance for this year to date, now this is from January 1st to July 9th. We started this service back in October of last year. We were up, I think, about 20% or 25% in the last few months of 2012. This figure does not include that. This is year to date so far. We were actually up over 700%, but then the market came back a little bit, and some of our newer long positions were stopped out, so it brought the percentages down a little bit, but we're still up a strong 6% this year. So we get often asked, hey, how do we do this? How do we go about finding these trades? What's the secret, so to speak? So that's what we want to talk about first today, all right? The first thing I look for in picking stocks or futures or even Forex markets on a position trade basis is I'm looking for positions that are going to be trending. And so that's step number one. Then the next thing to do is, okay, once we've identified a trending market, all right, how do we locate key entries, exits, and profit zones? That's another thing we have to focus on because, we don't want to get in too late to a trend, because if we get in too late to a trend, we may be too close to the profit zone area, and it may not be worth the risk to reward. So we want to stay out of trades where there's not enough profit in there, okay? We always use risk control. We always have a stop. In momentum trading, you always want to be using a stop loss. You don't want to be doubling down. And likewise, not only do you want to be using a stop loss, but of course you want to be using risk control and adjust your position size, also known as your trade size, for each and every trade. So we're going to talk a little bit about that as well. So one of the things to do is first uncover markets. And one of the things we like to do is actually uncover markets that are in play. And what we mean by that is we want to have sufficient volume in that market. We want to have a market that may be in the news, all right, or a sector that may be popular. And so in a bullish trend, okay, we're looking for stocks or futures markets or even Forex markets that are really popular and in play. And oil markets, for example, the gold market was at one time, stocks in the news like Apple. And sometimes we even look for analyst upgrades and downgrades. Now, the thing you got to be careful about when you're looking at analyst upgrades and downgrades with momentum trading is a lot of times an analyst will come out with an upgrade. However, the stock, in terms of where it is right now, may be finishing or still in a downtrend. So it may be too early from a momentum standpoint to buy that particular stock, even though the analyst has considered that one that you should buy for maybe a long-term portfolio. So you have to look at what you're doing here in terms of momentum versus investing. But likewise, if you can get the actual upgrade in tune with the momentum, then you've got a home run. Then you've just got to determine the best time to enter. And again, we're going to give you suggestions on when to enter based off our pick list, exact entries and exits. But you know, if you're using candlesticks, if you're using Stephen's program, okay, you can also integrate that in with the suggestions that we offer once we lead you to the right market. Okay, so we're really looking for good pops in the market that are best for short-term momentum trading. And of course, more traders, better volume, and perhaps better momentum in the direction if you are catching it in the right move. All right, we also look at emerging global trends. And again, we look at oil, okay, and all the surrounding news that was coming out during the oil crisis and so forth. That creates trending markets, either up or down. All right, emerging sectors, okay, and we also scan for market cycles. We have a unique scanner that looks for some proprietary scans. One of the scans that we like is looking for flat baselining markets. Okay, Stephen calls those frying pans. Okay, so those are all great plays to look for trends to come out of those. All right, so once you locate the specific sector or the specific stocks that you want to actually go into, okay, the next thing we talk about is determining the best time to enter and exit a market and play for profit. All right, I've developed a high probability matrix of technical analysis, and I look for key technical convergences indicating bullish and bearish trades. And so I'm connecting the dots on several of the forms of technical analysis or tools that we use in order to provide me with the best probabilities. Some of the patterns, for example, we look at 1, 2, 3 breakout patterns, okay? We look at pivot points, and these pivot points are classical candlestick formations. Steve went over a whole bunch of those yesterday for us. Fibonacci price levels, okay? And there's certain patterns, and Steve, you touched on this yesterday, that you can get during certain tops and bottoms. And once you see that pattern and you see the appropriate candlestick entry off that, then you're good for probably 2 to 5 price bars sometimes. And also, if it gaps at certain times, that can be the indication of a new trend developing. So we look for those. We look for those type of patterns. And also always keep in mind stop loss levels and price target zones as well. Very important stuff. All right, so just to recap a little bit, some of the patterns that we find that can make us money, bracketed markets, frying pans, as Steve calls those. I like that name, frying pans. Okay, breakouts from these frying pans. All right, 1, 2, 3 patterns. I call them fractal 1, 2, 3 patterns. 1, 2, 3 patterns that can occur in uptrends and downtrends. Reversal day pivot patterns. These are your classical pivot points in the market, easily identified through candlestick. Markets breaking above certain key levels, trend lines. Okay, Elliott wave, Fibonacci price levels, and even price target zones is something else we could add in there. Here's just a quick example, all right, of a baseline or channeling market or a frying pan, all right, and you don't want to get stuck inside that particular channel. That's an area that's going to give you a problem if you try to trade in there. So you want to wait for the breakout and then initiate the trade. Now on this here, note that we have, as soon as we have a breakout, we have a triangular pyramid trading point to use, and then once the market breaks, okay, we look for an entry after that. But these consolidating channels are just great areas for getting into markets once they break the channel. You got to have them break the channel first. Again, you got to wait sometimes. Let the market tell you what to do. Sometimes we look for Fibonacci retracement levels, and we look and for the proper level and form an area that we watch. In this example here, this goes way back to 2002 when the market had topped in 2000, was pulling back into an Elliott wave 4, and so we were looking for a price retracement area inside that ellipse you see on the chart, and sure enough, that occurred, and the market took off again. But again, once it gets into that area, what we look for is buying pressure. We want to be jump in. You don't want to be buying into a correction that may not be over yet. That's called catching a knife, so to speak. You don't want to get cut that way, so to speak. All right, so you've got to be careful about that. But Fibonacci is a very interesting and a tool that we use quite a lot, and you can see it in nature, too, quite often, okay? Looks like the slides are a little bit slow in forming, so I'm going to slow down just a teeny bit, okay? And on the Fibonacci, it looks like, again, it forms in nature. This is something we rely on, and a lot of technical strategists rely on the Fibonacci because one of my favorite Fibonacci slides, of course, for us guys, is this one, all right? I laugh when I saw this one for the first time. Okay, Fibonacci. I don't know how long she had to try to do that to get that work just right, but it's a classic. All right, so that's another Fibonacci found in nature. All right, now I'm going to give it a minute and let this slide load. This is a slide to 2013, and I want you to I don't know if you'll be able to follow me along on this. Let me see if I can get a pointer up here. Bear with me here. Okay, hold on one second. I don't see any pointer that I could actually use for this. So I'm just going to walk you through it verbally. You can see the chart. So one of the things I want you to focus on is on the left-hand side of the chart. If you notice, I have a number 3, okay, on top of a uptrend. That number 3 is an Elliott wave 3, and it is also one that occurred back in between right around, looks like April, okay, of 2012. And if you drop below that, you'll see an indicator called the optimum wave locator, which is a histogram that's green in color. And I put a 3 on that as well. And the owl is one of the tools that we use with the ART system to help us count the Elliott wave. So when we look at Elliott wave, one of the biggest issues folks have with Elliott wave, of course, is that it's subjective. At least they feel it's subjective, and it is at times when you're using just price to try to find the counts. What we have found is by combining it with a more modern approach, using the optimum wave locator, which we have at the bottom, it helps us to confirm or differentiate between a wave 3 and a final wave 5. Now, in Elliott wave trends, they consist of 5 waves. Wave 3 is the steepest and most dramatic of the waves. Waves 2 and 4 are corrections. And then wave 5 is the final wave up on a trend. And so we've labeled these on this chart, 3, 4, and then we put a wave 5 target zone. And we establish certain criteria that have to be met before we can conclude that the Elliott wave count is accurate. Notice that you have 3 on this area here in April. Then you had an ABC correction down to 4, which, by the way, hit a Fibonacci retracement level of 38.2, and that occurred pretty much in May, or June, actually, probably around June, I'd say. And then we had another top form, okay, as wave 5 in the target zone that occurred in September, which was the final high, and that target zone was a Fibonacci extension level between 61.8 and 100. Usually it gets up to 100, so it ended pretty abruptly, and then it sold off here, and we knew the trend to the upside was done when the owl went negative. Notice if you drop your eyes down to the indicator at the bottom, the histogram, you'll see it go negative right after 5. That was our first clue the trend had ended. Notice the bearish divergence between 5 and 3 on the owl. So we do a lot of connecting the dots to arrive at how probable or accurate the Elliott wave count is before we determine a trend is ended and get ready to basically trade in the opposite direction. Now the trend is down, and if you go to the far right-hand side, you can see the owl starting to get closer to the zero line, even though it's red, okay, and that means that we're starting to see bullish divergence. So that whole move down, all right, that correction, we don't think is quite over, because if you look at the indicator at the bottom, which is another tool we use to connect the dots, it's red. That's called the PTF at the very bottom right-hand side. And that has a 75% accuracy rate, which is very high. And it indicates you find the lowest low in that red area, and there's a 75% chance the market will retest and go below that low. So we don't think this market is ready to buy yet, but it will be eventually. And the long-term charts are actually still very bullish on OWL. They're showing a correction. When I talk long-term, I'm talking weekly and monthly charts. They're showing a major wave 4 on the weekly and monthly charts, so that will be followed by another wave 5 to the upside. So after this trend is finished, and it's not done yet on Apple, then we expect some more bullishness to come in. All right, let's move on and go to another one. Here's Ford. Okay, Ford was a real beauty. Basically, if I take your eyes and go to the left-hand side of this chart, you'll see a blue trend line, all right, representing the downtrend on the price activity. Notice prices broke just to the other side of that bearish triangular pyramid trading points on the chart pointing downward, indicating the downtrend. When the pyramid trading points are exceeded to the upside, that means the trend is changing. When you get your first P pyramid, then that is a possible entry level. Notice that on the OWL histogram, which has blue lines on this one, notice that we have bullish divergence building in that as well. So at that particular point, the trend was coming to an end. We then had a bullish OWL. We had a green PTF at the very bottom, and we were off to the races, to the upside. Again, connecting the dots. And even here, once you know a trend's done, then you can also use candlesticks to enter the market as well. So Fibonacci plays a big important role, but so does risk control, okay? Risk control in every trade is absolutely imperative. And we have, what we like to do is calculate our trade size on each particular trade. So we're not trading or adjusting our stop adjusted to the market. That's very important because it's important to have your stop loss level, okay, where actual reality of price is. And for those of you using candlesticks, you do this automatically because you have your stop set, okay, either when the market changes, when price changes, or on the other side of the candlestick, right? So you're already doing that. The next thing to do is being able to calculate how many shares or contracts if you're trading a futures market or an options market, or pips if you're trading the Forex market to use. So once you have an entry defined and an exit defined, then you can go ahead and calculate your trade size, and we have the nifty piece of software called the Trade Size Calculator, and we've had a ton of Steve's people buy this alone because they use it with candlesticks. And once you have your entry and exit defined, then you just put in the variables and it will tell you what your trade size should be based off the percent risk you want to risk on each trade. And for example, the percent risk we're using is 2% here, and that usually correlates to a system that has a win-to-loss ratio of 60% and a payoff ratio of 2 to 1. And of course, you can adjust that percentage based on how good a trader you are. If you have a higher win-to-loss ratio and a higher payoff ratio, then you can put a higher figure in than the 2% risk. But this way, you're always trading in accordance with the proper risk you should be taking on each trade based on your closed results. And so this is important. And just here's a close-up here. But again, notice the trade entry price, notice the stop loss price. This is on our particular trading approach. But, you know, if you were using candlesticks, you'd have an entry and an exit also. So you could use the same entries and exits for your candlestick trading and just put those into the calculator. Here it is on a trade we did on Disney where we entered using risk control on position A on the left-hand side. The market moved up, all right, and we got another chance to add into the trend on the middle of the chart when that next green-colored P pyramid formed. And one of the interesting things here in terms of adding into trends to note is that you do not want to add into a trend or add on to your current trade unless the stop loss level has been moved high. First entry is eliminated. That way you're not compounding your trade risk. So once your stop gets above or reaches at least a break-even point on your first trade, then you can assume, in this example, for example, another 2% risk. So you can add into the position. You don't want to be adding on to a trend if the position is at a loss, because what does that do? Okay, that adds to your risk. You may be at that point taking on too much risk. So you don't want to do dollar cost averaging with momentum trading. All right, here's a nifty little quick pop that we love to look for. Here's one AAMRQ, okay, that popped up back in February. And, you know, we look for markets anywhere from $1 on up. And we found that basically this particular beginning of the year, a lot of the small caps were starting to pop. And so we were watching them. We were watching. This one had a frying pan. This was a quick pop that we took up. You had candlesticks here, all right, and so therefore the pop could be taken and driven right out. It happened to reach a price target zone that we had on it, so we went ahead and got out at that point at 133% gain. Not too bad for just 32 days. All right, so let's take a look a little bit more at some of the trades we've had. One thing I want to do is give you this link where you can actually go to our website and see all our closed trades for this year. So that way you can actually stroll through, and I'm going to try to put the link up in the chat. And so give me 1 second for this. I got a couple links I'm going to put up today. So let's see what we can do with this. Okay, well, I think probably best on website, and actually if you go to the home page and go to trade results, you'll be able to see where to find those results. Very easy to find. We put it right on the home page. Just look for performance results. And it will give you every trade we've done this year leading up to the net, that figure that we put in there. All right, now what I want to do now is I want to actually take a look at some of these stocks on the actual live markets right now. These are ones that we've closed out of that have been real good, and I just want to go over some of the patterns that we look for and this to a desk sharing, so hopefully this will work okay. So here we go. All right, so we got that. So give me 1 second, and let me just bring up a chart, and hopefully that'll work. And let's see how this goes. If it doesn't load correctly, then we'll switch it over to a different way of showing it to you. Okay, first one I'm going to start out here is change the chart for a second and let that load. Good, this seems to be working. Okay, and so here's your classic fry pan on the left-hand side. Check that out. All right. Notice we started to get and this is a cheap stock. Okay, this was one that was just about $1, okay, a little under. But notice here we started to get some pyramids forming off this fry pan. The big kicker for us is when the PTF at the bottom went green, because it hadn't done that in quite some time, and the owl started to get bullish. What had happened is is it's also started to break out of this fry pan. We started to get some real P pyramids. These are all significant entry levels. And check this out. Just took off from here. So this is what we like to look for. We like to look for these fry pan type of bottoms and then boom them out. Okay, the next one I want to take a look at is ALU. Okay, and on this one here, if we go back to 2013, we didn't really have a fry pan bottom, but we had a long downtrend. Look at this. We went down here. That's an Elliott wave 3, 4, 5. So here's where we tie in Elliott wave to look for a significant trend bottom. And then once we have the bottom in, okay, then we look for the market to start to move to the upside. We look for some bullishness. Now, sometimes you don't get it right away. Sometimes you get that channel, okay, which isn't quite a fry pan, but sometimes it is, and then a break out of the channel. So we started seeing that on these pyramids here in the middle of the chart, and the PTF went from red to green with a bullish owl. So a nice, look at these breakouts here. Steve, you'd probably love these with your candlesticks, okay? But you see, the idea here is that it breaks out into the trend, and we want to be a part of that for a couple reasons. One is, okay, the downtrend ended. Two, it broke out of the basing channel. Right there alone, we get excited when we see that. Then, of course, the idea is then to try to get in as early as possible. And that's where our pyramids help us along with connecting all the dots. So that's ALU. Let's go to AMD. Here's another one we had a nice 32% profit on. And on this one here, notice a tremendous move to the downside, okay? Basing, the fry pan off to the left, and then a sharp move to the upside, okay? Now, what's happened is we took some profits out here, all right? But look what's happened. It's breaking out again, okay? So that's a good sign as well. And we'll see what it does on this price bar, which way it breaks off this price bar that just formed today. So that's ALU. All right, next one is Bonwit Teller, B-O-N-T. Okay, and this is one we captured a little over 40% on the market, and we did it in 2013 on this trend to the upside here. What we were looking for here is we were looking for this level of support right here to be broken. That was a key level of support here. And notice it came right when this price bar went over the pyramid, and we had a green PTF. Boom. You definitely want to be a part of that. Okay, you don't want to miss that one. Okay, that's Bonwit Teller, moves up, 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 and it's still going up. It technically, okay, has not faltered. We've had a wave 4, but we expect more highs, and we have a green PTF. So again, with the green PTF, we expect a 75% probability we're going to get above the high here on this price bar. So at that particular point, this is still in a bull run. That's BONT. All right, let's take a look at another one here. How about IPAR? All right, this has basically been just a classical uptrend here. Now, what's interesting here is when we got to this level in the middle of the chart, right here between February and March, it looked to us like this could have been a wave 3 going into a wave 4. All right, the pyramids kept us long here, okay? Then the owl never went negative. So if it doesn't go negative, you don't have a wave 4. So you had a minor 4 inside a 3 because then the next time it took off, the owl was even higher than the previous hump, indicating that you were still in wave 3. So now, basically, at this particular point, we're still going up. We have not had enough of a retracement for wave 4, so you're technically still in wave 3 at this particular point, okay? And that's IPAR. Okay, so let's move along here. SPWR. This is going to be the last one I show you tonight. I just wanted to give you a few examples of what we look for when we go in and create this trading picks list. All right, notice the fry pan on the left, right? Okay, classic. All right, notice the break above it. This was very similar to the AAMRQ, wasn't it, when we looked at it, the first one? But it's not. Different stock, more expensive too. All right, broke out of the fry pan or the channel. We got a bullish owl, green PTF, green pyramid trading points off to the races, to the upside. All right, we were able to pull out 45% on that one as well. So now I'm going to go back to the PowerPoint for just a second here. And let's see if that changes over okay on the, without having to change it over. Okay, I think it looks pretty good. I'm going to try and see how this works. A little slow in loading, isn't it? Some of the ones we just looked at, okay, and so, again, the actual entries and exits I want to show you. And let this load a second. Let this chart load on your side. All right, there you go, I think. All right, what we do is notice a bunch of columns here, okay? We've got, of course, the certain information here on the left-hand side to differentiate this between a stock, a future, or a Forex, okay? And, yeah, you may not be able to quite read this. You'll be able to read a lot better on the, here, I'm going to read these columns so you can follow me along, okay? And this is a current stock. This is a stock example of a closed trade, all right? Now, we're not going to give you a current stock example because simply those are for our subscribers only. So we have 10 new picks that come out each week. And those picks are basically our pending trades for the week. And so you get 40 picks a month off this service. Now, 4 of those picks out of the 10 are stocks. 2 of those are ETFs. 2 of those are futures, and 2 of those are Forex. Okay? So there you have it. All right, so the first one here, okay, this was one that was initiated for coverage back in 120. We have a description, the symbol, the chart used, if it's a buy or a sell. Now, what's interesting is most of our entries, okay, have a wait signal. In other words, a wait in order to you before you actually take the trade. And what we want to do with that is we actually have a price level, either on a long trade or a short trade, that the market must meet first in order for us to even pull the trigger to get into it. So a lot of times these will not be trades that have an immediate entry. You may have to wait a day or so, or a couple days, or even a week, all right? But we always have enough pending trades that we're very, very active each and every week. And you can see that from the closed trade list on all the trades that we take. So we wait for a certain market event to cause prices to move in the direction of the anticipated move. We want it to be confirmed. So we don't just jump into things. We actually wait for a nice structured entry so we get a good entry, so we have a nice risk-to-reward ratio. And then we also tell you where the stop is. Every week we update the stops, and then we have a price target zone as well. So that's how the tables look when you actually access the area. Now, I'm going to tell you what I've got planned for everybody here for Steve's group. And this is a great deal because this is cheaper than you'll find on the website. But for $39.98 a month, okay, you can join the subscription, the service. We have tons of subscribers throughout the world right now because we have been able to keep this service cheap enough because we have so many subscribers that it is basically a slam dunk. So it's $39.98 a month for you guys only. All right? Back on the website, it's $49.98. Can be around. We're not going to keep this around forever, but for $39.98, you can try it. Okay. What you do is when you sign up, all right, you will be billed $39.98, and then every month it will automatically charge you $39.98. So if you sign up today, okay, and you decide it's not for you, you can just cancel the subscription and no further charges will be charged. But you have to actually cancel the subscription because when you join today, it'll put you on an automatic billing. Okay? So this is not a one-time fee. I want to make sure everybody understands that. This is for a subscription that's ongoing. Okay? So let me put the link up here in the text chat area so you guys can check out the offer. And Steve gave such a great offer to our group yesterday that I wanted to do the same as well today for his folks. I'm just going to put the link up here. And give me 1 second because okay, there's the link to the special offer, okay? Well, hang on to that. Bookmark the page. And you can just sign up right there, okay? I'm seeing a question, how much is the actual trade size calculator? The trade size calculator is $249 for a lifetime license, and that will work on stocks, futures, and Forex markets. Lisa, you are welcome. All right, so let's move on here. Now, one of the things I want to tell you, too, is that, not every trade we take is a winner. Okay, we have a lot of trades, okay, that we get stopped out on, but our losses are kept at a minimal amount compared to our wins. And we have on the closed trading area, we have the statistics where you can see, for example, how many trades. I think we've taken 198 trades so far this year, and you'll see where we're winning about 60% of the time, losing about 40. All right, so that means out of every 10 trades, we lose 4 times. But we cut those losses quick, all right, 2 to 1, okay? And in doing so, some of those winners win really big, and that's what you need to do in trend trading. We have also a lot of, marginal wins and some marginal losses, small losses, but you get those big wins, and they make all the difference in the world. And so that's what we do. We are uncovering markets that have the best potential, and the ones that don't pan out, we want to get out quickly. And that's how you make money in trend trading. All right, let me just field a few questions. This is all I've got for today, okay? So let me just field a few questions here if you guys got any, all right? Okay. Yep, you guys got a bunch. All right, first one is Wayne says, Bennett, your results will be better with add-ons. It could be. All right, we structure the trading picks to be for everybody, meaning that we give you a suggested entry, we give you a suggested exit. Now, if you're using candlesticks, all right, and your entry, okay, is based off your candlestick entry on a stock that we're pointing you to, then you can use your trading approach along with our picks. And if you don't want to get out at the target zone or get out where we place a stop, then use the stop based off your candlestick. If you want to add into your position, you can. All right? We don't get that fancy with add-ins on this pick list because I think we'd lose many people on it. I don't think they'd follow it. They wouldn't understand it. So we try not to do that. We just try to keep it simple and give you good, decent setups. All right, Eric's asking, is there any record of Steve Bigelow's webinar from yesterday? Yes, Eric, if you're on our mailing list, email list, we actually sent that first email out today. Okay, so check your email box. Oh, Jean says she'll get it for you. Good. Okay, minimum volume of stock you will trade. It depends. What we try to look for, again, is stocks in play. Okay, news that may be coming out on that creates more volume. So what I would recommend doing is if you're trading under a $5 stock off our list or your own for that matter, always use a limit order because if the volume's low in that particular stock, you want to use a limit order to get in so you don't get a bad fill. Okay? All right, how about results for an IRA? I don't have results specifically, Kendall, for an IRA, but basically that would depend on what your IRA would allow you to trade. But no reason in this market, at least so far, it's been a bull market just about all year. So in an IRA, you could have done as good as the returns that we have in there. On a bear market, you might not do as good because we'll be shorting, and some IRAs don't allow you to short. Okay, does the calculator work on options? It does because it works on contracts. Okay, you just put in the options contract. It will give you contracts. Set it for futures. Sam B, we only use TOS. Can we still follow your picks? What do you mean by TOS? Explain that a little bit. Because we're going to give you everything you need to actually use our picks. In other words, you don't need anything else. We're going to give you the entry and the exit. We have even some people that don't even use their own analysis and just follow our picks verbatim. Okay? All right, got questions coming in fast and furious here. Let's see what we got. Just don't want to miss anybody here. Okay, how do you notify entries and exits? That's a great question, Sam. What we do is we created a secure area in our website. And when you sign up for our service, we're going to send you an order confirmation, not your standard order confirmation you're going to get from the billing department, but we will send you an email from traderscoach.com that will have a link and a username and password for you that's unique for you to log into the area where we house all the trading picks. And what we do is we update the trading picks each Sunday, okay, and we do this by the afternoon, and at that particular point you just go in at that designated time and retrieve the picks and all the updates. Now, we have, tons of open positions because don't forget, we're giving you 10 a week, and if you start, not everyone that opens, gets filled, gets closed that week. So you may have 20 or 30 open positions. You may be in 5 of them, but you need to know, if we've moved the stop on those. So that information is all in that secure area because I go through each pick, and update the stop if needed. Okay, if there's still a pending pick left over from the previous week, then I'll update, if I need to, the entry, okay, if that's changed. So every week we update the stops. Okay, this is not day trading. We're really looking for a longer-term position trading type of market here, okay? All right, so great question, Sam. Thank you. Okay, name of your book coming out this fall. It's Elliott Wave Simplified, Toby, and it's published by McGraw-Hill. Fall to winter, it should be out. What is the PTF from VP? PTF stands for Precision Trend Filter. It's actually PTF. And it is a indicator that I developed that when it indicates green or red, for example, if it's green, there's a 75% probability that whatever the highest price bar, the high of the highest price bar in that green area, markets will exceed it. If it's red and it's on a downtrend, then whatever the low of that lowest price bar in the trend has a 75% of prices going lower. Okay, called the PTF. How does this work with futures? Great. Okay, look at the results. Okay, you can go to the closed trades, Joe, and see for yourself. Okay, good questions, guys. Okay, currently our software, when we talk about like the PTF, the OWL, and the ART, if you go to our website, you can see what platforms it's compatible on. The popular ones are NinjaTrader, TradeStation, eSignal. Okay, we got MetaTrader, we got MultiCharts, Market Analyst, Trade Navigator, and if you're using Metastock, we have the OWL and PTF for Metastock. The ART triangles cannot be drawn on Metastock, so we could not develop the triangular pyramids for the Metastock platform, but we did design OWL and PTF for that. All right, so Thinkorswim, no. But, if you're using Thinkorswim, which is TD Ameritrade, you can use the NinjaTrader platform with their data. Because NinjaTrader, it has 2 basic types of platforms. One you can pay for if you want to put the orders through it. But if you just want to use it as a charting platform, it's free. Okay. What is the current U.S. market direction? Great question. Download my free report. Basically, today was a monumental day in the market. Why? Because it broke a key level of resistance, which was actually the top of B wave on a wave 4 correction. So we think now the market is done with its Fed jitters and is now moving higher and will make new highs and break above the May high. All right, might not do it right away, and we are due for a pullback because we had a nice surge up, but after a little brief pullback, we should be headed back up. How long do you stay in a position on average? We have the average numbers of the days we are in the position on the closed trades, John. It's about, I think now I don't have it in front of me, but I think it's about, I'm going to say 27 days for all trades, and I think for 24 days for the long trades, and something like 14 days for the short trades. And that makes sense because we're cutting our losers quicker than our winners. All right. Sam's asking, so we won't have the proprietary software. No, this is just a trading pick service, okay? Steven says TOS Ben is think or swim. Okay, of course, I should have known that. All right, thank you. All right. Yes, the Allen PTF are proprietary and available at traderscoach.com. Steve, I'll have to come back and do a separate webinar on those. Toby, I love Elliott Wave and Fibs. Well, that makes two of us. But you know, those are forecasting tools. You still need candlesticks and a form of entry and exits. Okay, so you're always based in the realities of price. Okay. What about alerts on text for cell phones? Nope, we don't do that because not needed. Best thing to do with these position trades is not tinker with them too much. Is it possible to get your indicators? Yes. End-of-day charts is primarily what we use. Yes, occasionally we'll look at the weekly charts to just see the trend if we need to. Okay, Steve, I think I've got through most of them. Dave's asking how much is the PTF. All that information, just go to the traderscoach.com website and go under Trading Tools, and you can take a look at all the tools. Okay. 2-minute NQ, the NASDAQ 100 E-mini, great today, cool. All right. Most of the picks, Sam's asking what's the price. They vary. Some are cheaper. Occasionally we get an expensive one, but they should be pretty affordable for everybody. There's enough of all ranges in there that we have found that nobody's complained about the price in terms of the actual price of the asset that we're recommending. Okay, when do we get the log on and password? Well, those are manually produced. So if you've ordered anything, you'll get those by this evening, okay? We'll get those to you. All right, Carol says, very interesting, informative. Thank you very much. Well, thank you, Carol, for attending. Candace, thoroughly enjoy your presentation. Come visit again. Well, thank you. Well, thank you, everybody, okay? Really appreciate that as well. And Gene put a link up there that just shows our various products as well and how to get those. So thanks, Gene, for doing that. Okay. All right, Sam's asking a good question. Hey, Sam, you've had some good questions tonight. Do a $5 pick versus a $200 pick work the same way? You know, we work in percentages. That's why the profit and loss you see is always represented as a percentage and not a dollar amount. All right? And the answer can be yes. I mean, look at Apple when it was moving up. That was an expensive stock. All right? Yet you could still make a huge percentage on that, just like the lower cap ones. Are the Forex trades long-term? They are. They're based off daily charts. Okay? Yes, we do include shorting. But I got to be honest with you, we have not done much shorting this year because it's been a bull market. But you'll notice on some of the closed trades that we have shorted and done very well on, primarily some of the futures markets we shorted. But most of the equity markets, for the most part, we stayed geared with the uptrend that's been in place. Recently, we thought we were, during this correction, it may go a little deeper because it just went down to the 38.2%. We were hoping it would go down to about 61%, but it didn't quite make it. So some of the short positions to take advantage of the correction did not pan out, and now the market's moving higher again, so we'll go back with the bullish positions. Okay, ETFs, yes, and we do inverse ETFs as well. Okay, what is the 4x% wins and profits? Best thing to do is go through the close list, all right, and add up all the 4x's and subtract, get the net figure from there. So we give you all the information on that close page. So just go there and take a look at it, and then you can come up with the right numbers. How many open trades now? Don't quote me on this, but I would say probably, we probably got about 10 or 15 open right now. We had many of our good profitable long positions also stopped out when it went into a market correction. And then we got probably about 10 or 15 also. No, I'd say open trades probably more like about 20. And I'd say the pending trades is more like about 10 or 15. Okay? All right. Steve, that's probably, we covered a lot of material, and I think we're coming up on time here, okay? Listen, again, I want to thank everybody. You guys were super, all right? And if you placed your order, we'll get that processed and get that link out to you later this evening. You'll have it by the end of the evening tonight, and you'll be all set to enter and access, okay? But remember, it's a subscription. Yes.
Bennett, excellent information. And this is what I always tell our people. If you can figure out the indicators and put as many indicators as possible in your direction that you know you're going to be in the right position at the right time, the more you can put in your direction, the higher the probabilities. So this is why your information is very good as far as here's techniques that improve the probabilities of being in the right trades at the right time. And again, as we advocate with candlestick signals, you can see exactly what's going on at the time. This is where you take this information and assemble it for yourself so that your own trading method is the accumulation of high probability situations. And we will probably have a lot more of Bennett's information associated with the website, especially in the long-term picks area, if I could ever get that up and running by the end of the summer. So, Bennett, thank you very much. This is great information, and I think this is the type of information everybody needs to have in their arsenal and learn how to use it, or learn what is acting well and what is not acting well. And you give the same philosophy as what we use. If the trade's not working, close out immediately and go on to something where the probabilities are in your favor.
Absolutely. Absolutely. Yeah, our philosophies, Steve, are very similar, which is why we enjoy working with you so much as well.
Great. All right, well, thank you. We will definitely have you back. This was good information. I think this is something everybody can put in their mental arsenal and use to their advantage.
Okay, well, thank you, Steve, so much.
Yep, thank you, and we will thank you, everybody, for showing up tonight. We will see you in the chat rooms.